Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, November 10th, 2023. S&P 500 currently sitting at 43.94. I'm David Zarling. I'm here with a man who shares his birthday with the United States Marine Corps, Ian McMillan. Happy birthday, friend.
Thank you. Thank you. Another year older. So,
that's right.
Obviously very, very thankful for that.
One more trip around the sun. Maybe if there's conspiracy theorists, maybe there's
I don't know. It depends on who you talk to out there.
Yeah. Another year in God's grace. That's awesome. That's a blessing.
That's the best way to put it.
Yep. And so I hope you have a wonderful birthday today and get some time with family and
it's a good
do all the
months.
Why don't we jump into it? You and Kevin did a great job covering for me last week, and I appreciate that. Last week was pretty eventful from a market standpoint as far as some of the readings that we recorded that you guys might not have known until after close, and a couple of those things would be some breadth thrusts, right? Breadth being the participation of stocks. We kind of had this capitulation event last week where, a technician might use the term a market flush the week before that, and then substantial response in breadth. Almost, you could argue, the gun going off for a new marathon race. Now, that will be to be determined. We don't predict the future. But anytime that you're recording a Whaley breadth thrust and a Zweig breadth thrust in the same...
So we officially got those?
We did.
Okay.
Last week, yep. And there's some debate about whether there was a Zweig breadth thrust earlier this year. I'm not really looking to get into a debate about that. I will say they are infrequent enough that they are worth paying attention to when they do happen. And the simple way to put it is in 10 trading days, it's going from an extreme amount of selling to an extreme amount of buying. So you go from panic selling to panic buying. And that's really what we saw the prior 2 weeks, with last week being the panic buying and the forward-looking potential returns out of that. It's the Zweig breadth thrust has a really strong track record when we look 6 to 12 months out. Again, these are not guarantees. It's an indicator. The best indicator on the planet is price itself. So don't take a Zweig breadth thrust over a price level. For example, 4180 on the S&P. The only way you have strong forward 6 and 12 month returns is if you stay above 4180 on the S&P. That's just math. It's not that hard. But it's 100% accurate each time it's been recorded, as far as being 100% of the time we move higher, and 6 to 12 months out, positive returns. And some of them substantial. It's again,
substantial. Yes.
I just want to highlight again, it's not a guarantee. That's not why we use these tools. But we knew going into last week, the prior episode that we were on together, we described it as a rubber band that was stretched. And it's either going to snap back to rest, or it's going to break in half. And for the time being, it appears that this rubber band is quickly coming back to rest. And we need to see further confirmation of that. 1 week is not a trend. But so far, where we're at on Friday, November 10th.
Yeah. Sideways for most of the week. And then so far, good, especially after yesterday. Yesterday, probably got a little bit antsy. A lot of bearish engulfing candles out there.
You and Kevin did a good job highlighting the volume weighted average price, the VWAP from the highs going back to January 22, and that's where we bounced off of end of last week going into this week. What's interesting is yesterday's move went and touched the volume weighted average price from the July highs in the S&P using something like SPY. Mm-hmm. We touched that and responded to it. A good technician, Brian Shannon, would say that would be the first step in a VWAP handoff.
And you're talking about the S&P?
I am talking about the S&P. When you look at SPY and we look at where we bottomed going into Friday, October 27th, that level, not only was that around 4180, it was the volume weighted average price from the October 22 low and the volume weighted average price of the December/January 22 high. We moved very quickly, recorded those two thrusts, the one corrective day this week, right? Because everybody and their mother, although I didn't get a call from my mom about 8 days in a row or whatever it was of the S&P being positive, which I understand is a rare event, but markets do rare things consistently. But then talking about the volume weighted average price from the July high, that's what we touched yesterday. That would be an important start to hold that along with 4180 and the 200-day moving average.
I did, thinking back on this, right? I did get a text from someone, I think it was October 25th or 26th.
Okay.
About the market getting crushed. Maybe that should have been something I took more into consideration. But hey, here we are. Like you said, back up above 4180, back up above the 200-day moving average, back up above the August 2022 highs at 4,300. So, yeah, I mean, right back to where we were on October 11th. Right. All of that, and 30 days later, look where we are.
Yep. And that's using something like the S&P 500. I know we talk about that index a lot on this show. There's also other indices, though. We could talk Nasdaq 100, which it has some pretty strong overlap with the S&P 500 as far as from a weighting perspective. So it makes sense that it matches. But this is a market of stocks, right? This is not just the S&P 500. What about the Russell 2000? What are we seeing?
We talked about S&P and Russell, for the most part, being sideways for the week after the big weeks they had last week. And so, pretty healthy. Russell, on the other hand, gave back quite a bit last week's. I mean, I would say at least 50. I've got a 61.8 retracement. So there you go.
For our listeners to paint the picture of the difference in these different indices and what's happening at the surface and below the surface, right? When we talk about a market of stocks, you mentioned the S&P being above its August 22 highs, right? So we're talking about 15 months ago, it's positive 2% above its August highs. The Russell 2000 August 22 highs, it's 17% below that. So you do
4% for the week.
Right. And you do have this, what we, I think in previous conversations, we called this a thin bull. Maybe some people remember that biblical account of Joseph and his dreams and the 7 years of great times and the 7 years of famine. And there's those fat calves and those thin calves. And that's what I'm thinking about with this bull that's been going on since October. It's very thin. In some areas, you get to say there's a bull market. In some areas, there's a bear. We don't get to say that small caps are in a bull market. That's not true. The Russell 2000 is negative year to date. It's still near its lows for the past 3 years. That's still a bear market in that measurement. Yes, we have large caps doing well, and that's hidden a lot of the carnage underneath the surface. And not bringing that up to whine about it. I'm just stating a fact. When we look at, for example, year to date returns for the S&P 500, and 10 out of the 503 stocks in the S&P 500 are responsible for 134%, not 100%, 134% of the S&P 500 return. I mean, that's significant. That's a level we haven't seen ever. The Russell 1000, which is the S&P 500 and the next 500, if you equally weight, is negative year to date. Microcaps.
Is equal weight S&P negative for the year?
Ooh, good question. Let's take a look. I'm going to use something like RSP, being an equal weight representative, flat to negative. It's down very slightly.
There you go.
There you have it. Down about 1%, a little less. So here you have this environment where the leaders are leading, and that's a good thing. But that doesn't mean the market of stocks is an easy market of stocks that's happening underneath the surface. You got microcaps that are well below lows. This is going back to this environment. Like, what are the things that you could see? This flush that's taking place on a relative basis for small caps versus large caps. Do you see a rotation? We can talk about that a little later in the show.
And now you can't be a contrarian for the sake of being a contrarian, because that's kind of
right
the antithesis to trend following. I mean, you'd like to see it, but then, and I tell you what, and I've talked about this on Twitter, when you zoom out on the Russell 2000 versus the S&P relative relationship, there's a good chance we go back to the lows of, where we were in 99.
Right.
and banks. I don't know what's going on there.
Did you know another bank went under last weekend?
Like
Yes.
the publicly traded one?
Citizens Bank out of Iowa. I would have to look to see if they were publicly traded, if it's one of these. But there was a regional bank out of Iowa that went under that got pulled in by the FDIC. Now, the claim is not that it had to do with, mark-to-market accounting and the treasury on the books, but their exposure to freight and trucking.
Okay.
Which I think, which is a story that's underneath the surface, right? It's not like transports have been just a great place in this market environment.
No.
Very similar in some ways to a Russell 1000 or something that's not the S&P 500 is back in a range. We've seen bankruptcies in that area. I was doing a lot of driving this last weekend and I didn't see a certain truck on the road, brand of truck in yellow. I don't know if you remember that brand.
Oh,
but
yeah.
they declared bankruptcy. I didn't know that.
Someone dared me to say trannies on live TV yesterday.
Oh, okay. Did you do it?
I did not take them up on that.
Okay. Because you were on Charles Payne show, right? You were on.
Yeah. I didn't really there wasn't a moment to slide anything about transports in. So it would have been a reach.
It would have been awkward.
Yeah. It would have been obvious that I went out of my way to say that, which would have been,
So, people want to know all the time, what's client sentiment or what sentiment are you seeing out there? Well, what's the news host sentiment? What's Charles thinking about? What questions is he asking?
Russell 2000. Some questions about the Russell 2000. He asked about a stock I liked. Some questions about call volume in the Russell 2000, which when people talk about call volume and they use in dollar terms, anything really in dollar terms, and then it gets compared, think of just about how much more money is in the system now versus 20 years ago.
Yeah, you can't use nominal terms.
You can't use nominal terms.
Everything's relative.
And talk about things that happened 20 years ago. Oh, well, they're buying twice as many calls. Well, yeah, there's probably 2 to 3 times as much money flowing out there at this point.
Right. Totally agree. So that's interesting. And the Russell 2000 is, we've already talked about it on here. It is important. It's at a spot, right, that matches its September and October 2022 lows, which were its June 2022 lows. It's this range that's existed since April of 2022. That's 20% in size. And we talked about this in the past, right? The amount of 20% corrections within that range. There's been several bull and bear markets within that range based on size. It's a size of range that we haven't seen in over 50 years.
It's wild. I was just thinking about it. It goes back to that failed breakout in 2021. You remember that?
November. Yep.
And I was so bullish. And then immediately got kind of sketched out when that failed.
Yep. And
here we are. It's got to do, I sit here and say it's got to do something. We're 11 months into the year and it hasn't done anything in S&P. So clearly, that can continue. But as far as, it doesn't make the market healthier. If we do this all again in 2024, it's not like things improved under the surface.
Right.
Start participating. Our old adage, it does not have to outperform. Holy cow, man.
Just stop being in this range or going down.
Yeah, find some buyers, get a marketing team, get out there, door-to-door salesman, something, find some buyers.
Yeah, I was walking around Kansas City trying to find buyers.
Dig in your couch cushions.
Yep. Everybody get out there.
Range.
Well, and doesn't the Russell 2000 fit the old adage of if they don't scare you out, they wear you out? Right. So you drop from November of 21 through June of 22, you drop 30%, and then you move in a sideways 20% range through today. That's a scare you out, wear you out. And
a lot of stopping and starting.
Which is not great for we're a trend following firm. We're very familiar with the havoc that can wreak on performance, and we know that from hard markets come easy markets. Now we need to see proof that there's easy markets. How would that be proven? Well, simply if Small caps could stop going down. That would help with breadth. Even better if it started going up and maybe get to the top of this range and maybe even clear the top of this range, which is around 187. Can you believe I even said that? Or I'm sorry, around 195 on something like IWM.
I mean, what a whole, and there's some feedback like, oh, you guys are, I don't want people to think you're asking too much, but like, this is what happens when you dig yourself into a deep hole. Like, yeah, it's a lot to get out of it. And to even begin thinking about fixing something, the Russell still needs to rally another 19.5%, 21% just to get out of this range.
Yeah, your point is just
that could be a year's worth of effort.
Right. Yep. It did accomplish that in a few months prior in the range. Yeah. And last week might have been a good start. And it's not abnormal after these thrusts to have some backing and filling, like a week or two of corrective behavior, as long as you're not usurping to the downside the levels where you started from, where the thrust came from. And so the table is set, is the way I like to describe this. Seasonality is set up. Seasonality is not a guarantee. It's just an awareness of environment of November through April, going into an election year. The 4-year cycle is a very strong period of time for stocks historically. Now, the clue would be if IWM is breaking down, if small caps are breaking down below 165, if we're back with a 5-day moving average below a 200-day moving average, if we're below 4180 on something like the S&P 500, that would be a huge clue that we're not in season and that Mr. Market came and blew up the party and the table's going to be trashed. There's going to be cups and plates broken because the table that was set last week for good things to happen from that point forward got smashed based on price. Until those levels are broken, though, the idea that Mr. Market is here to party is still viable. Only time will tell, and that's hard. People want to know the future, like what's going to happen next. I can't give people a prediction. I can only give you a plan. And you have to have a plan when you're dealing with markets because markets do abnormal things.
There's always every 3 months or some once in a decade.
It's just so interesting because when you think about markets, and you basically touched on it, and you realize that the most consistent thing that markets do are things that are inconsistent. And we've given the example in the Lunch and Learn in the past of, if you think about the world, the globe, how many times during a year does a 100-year event happen on the globe for a weather event? It's every year.
All the time.
And that's markets. That's just the reality of how they operate. And when I think about markets right now, John Templeton, one of the greatest investors there ever was, he would say bull markets are born on pessimism, grown on skepticism, mature on optimism, and die on euphoria. Yeah. So pessimism, skepticism, optimism, and euphoria. In your mind, Ian, when we take inventory of our clients' sentiment, of the sentiment that's out there in the media, are we at optimism or euphoria?
No, definitely in skepticism.
Yeah, it's either pessimism or skepticism that we're currently at.
I mean, even I am slightly skeptical, but because we have a process, I don't really, that doesn't really come into the, right? It's the same thing about our politics. Like we've told clients, you and I clearly have political opinions on things. Do those make it into the portfolio? No. Do I have opinions on the market? Yeah. But if the chart is a chart, and if we're back into participation mode, then.
Well, and if you've got commodity traders and their accounts, record short this market, you have massive retail buying of money market funds. You have
the money market thing gets bigger and bigger.
Yep.
A lot of money in 4 and 5% cash.
Yes. Which is great. Like it's great to have like a rate that should be exceeded by the market. It's great to have a rate now that is meaningful.
And I get it right. A lot of advisors and PMs are mentally worn out. Yep. And if you can put 20% of a client portfolio into a quote unquote risk-free asset and get 5%. I mean, you can buy 3-month T-bills and get 4 or 5%. Yeah, I mean, I get it. Not my MO, not your MO, but
here, and you've got a equity put call ratio that's nearing levels that we saw near the correction earlier this year in March. And there's a lot of this that reminds me of March as far as the skepticism and pessimism. Like, these are not metrics that you look at and say, oh yeah, we're kind of long in the tooth. We're near optimism and euphoria. If we paint the big picture, reminding our listeners that for many stocks, I would argue most stocks, the correction and bear market has gone on from February of 2021 through now. That's a pretty long bear market. And I understand what the S&P has done. Now, I'll also highlight the S&P is not back to all-time highs. The Nasdaq 100, and these are the best indices on the planet. Nasdaq 100 is not back at all-time highs. There's room there in addition to underneath the surface. Sorry, say that again.
Not even at year-to-date highs.
Right. And so there is, in my opinion, a plethora of information pointing to pessimism and skepticism. And we've been going on, what is that, 2.5 years?
And
more?
For your average stock, yeah. I mean,
for your average stock, you've been in a correction for 2.5 years. And on top of that, you have bonds that have done the same thing using aggregate bonds, AGG or TLT. With the exception of the first part of 22, commodities have also corrected. So, internally, the clients that watch their accounts the most have the most pessimism or skepticism. But externally, when you look at the media, I'm not seeing any optimism out there. And so the table is set. The table is set for, you're heading into the strongest 6 months. You just had a washout. You just had these breath thrusts. You have a ton of shorts sitting out there that all they are future buyers. Now, all that's good and great. You have to stay above 4180 and you have to stay above a 200-day moving average. It's that simple. Like you said, you can be as skeptical as you want. Your skepticism goes away as long as you stay above those levels.
I agree.
So what else, Ian? What else was notable this week or a follow-up from last week?
I mean, I think it still continues to be the large cap, mega cap, growth tech, pick your favorites, your semis. FAANG stocks look good.
Dang, I haven't heard that in a while.
That's just...
You're not talking about Diamondback Energy either. You're not talking about FANG. No. You're talking about the FAANG stocks.
Yeah, that same theme. That's what you continue to see hit new relative highs. They've held up the best through even things like metaverse kind of creeping up. Like, are we back into that realm again? Some foreign areas are not horrible. I mean, Brazil, not bad.
Well, I think you brought up metaverse. I think it's worth talking about crypto.
Crypto, another big week from crypto.
Right. When you think about your bigger names like Bitcoin, right, that cleared the 30,000 level, hasn't looked back. Is there a chance that that's going to be a Thanksgiving table conversation because it's back in the popular mindset? Or maybe even
I wonder how many people are participating in and around. There hasn't. When you talk about sentiment, I feel like Bitcoin has, a lot of people got over it. I think a lot of people got in late, got crushed for 2 years, and there hasn't been a lot of hoopla from my perspective around the latest rally.
So you would say that using John Templeton's metrics that it's not at a period of optimism or euphoria yet?
No, definitely not.
Yeah.
I mean, you see the random so-and-so says Bitcoin's going to 100,000 or whatever. And all the other things linked to that, the NFT stuff, not back at all. What was, speaking of metaverse, I'll have to go look to see how much my Decentraland property is worth, but I'm assuming it is absolutely not back. Yeah, I think there's a lot of people that, just lost money, got worn out, and kind of decided to move on with their lives over the last 12 to 24 months. And yet here we are now, probably at the beginnings of
a new leg
higher.
Well, look at Ethereum. I mean, it's on the verge of breaking and staying above 2000, which has been an area of selling since June of 2022. And if we're going to be breaking, and some of this does have risk on metrics with equities as well,
For sure.
that, if you're going to be risk taking in crypto, there's risk taking that goes on in equity markets. And so if you're going to have Ethereum and Bitcoin continue to move from lower left to upper right after breaking important horizontal levels, I think you're right. I think people are going to be talking about these things again. I do think that, now that we're fully exited from the darkness of COVID, is what I'll call it, where you had people turning into day traders and not actually doing their job when they were at home. And so they became part-time traders. And now that people are back to work and actually, having to pay attention to their work, which is a good thing, especially with advent of generative AI, we're going to become the most productive people on the planet, that these things won't get as much attention. But I'm guessing that if they continue this pace, that in a few years, if you're not holding them within a portfolio, you're going to maybe get some questions. Time will tell. There's no way to know that.
No, there's not.
So we've talked a little bit about crypto, Bitcoin in a good spot, Ethereum. We're not going to get into the alternate coins, but going back to equities and these breadth thrusts, the other development and a thing that people tend not to pay attention to is the old school method of point and figure technical analysis, and seeing bullish percent across a wide variety of things flip to X's, whether it's NYSE, world equities, the optional universe. As Tom Dorsey would say, a great technician, what offense is on the field?
It is back on the field. No punting yet. Did not punt this week.
Yeah, the only argument you could make for that, right, is maybe small caps fumbling the ball yesterday. Maybe. Time will tell by the end of this week.
We'll see if they can recover their own fumble.
Right.
But yeah, it was quick. It looked bad, and we got an interception. And the offense it's back, and we'll see what they do. They have they've got seasonality. We've got home field advantage right now.
Yep.
Should be a good time of the year to buy stocks. The leaders are leading, like all the things that we know are overweight to drive indices higher. Tech, things like that, they're working. And like we said earlier in the podcast, what does that mean for small caps? I don't know. Small caps, they just got their own issues that they need to spend some time on.
Yeah, the tiny
I don't know if it's therapy. I don't know what it is.
I think they need to get a job.
They got to get
one of those uptrending jobs, where you actually have more demand than supply. That's what those stocks need to do, is get their stuff together. I
got one kid who's getting their doctorate, and I got another kid who's playing video games on the couch, and I need him to do something.
Get him out of the basement.
Yeah.
We need IWM out of the basement, out of this 165 to 170 level. And we'll see. I mean, that level is just so important. And it doesn't have to happen. We've watched this range now for 18 months and the S&P move higher. That's fine if we want to continue to get narrow. Just remember it works the other way too, though, because when and if the Big 10, or whether you want to call it the enormous 8, Elite 8, Magnificent 7, I don't care.
I like that.
If those things are going to roll over, they might hide strength underneath the surface.
Can you have a flat S&P flat and the Russell up 25%?
You could.
Good. Bank's got to do it. I mean, we got to do it though. Like, you got to see it show up on a chart. We don't. We can talk about spreads and, look how much values underperform growth, or I saw one recently about yields and bank stocks. Huge spread. Obviously, right, makes sense. And for a big part of, most of my career, bank stocks were all about what, at least on a relative basis, what yields were doing. Makes sense. We've gotten our spike in yields and interest rates over the past 1 to 2 years, and banks just flounder around like a fish out of water.
Yeah.
So does that come back? I get it. I see the spread. We all get it. We've all seen the data, as you know, same with foreign versus US, right? We've all seen it. But until that relative chart line starts moving upwards, you can pick a billion bottoms. You got to see it.
Yeah.
You got to see it happen.
Well, and to your point, right? If small caps were to move to the high point of their range for the last greater than 12 months, that would be about a 17 or 18% move. You know, if on a relative basis, it were to get IWM versus S&P were to get back to the breakdown level, which is near 0.0418, that's about an 8 to 9% relative move. It wouldn't have fixed anything on a relative basis, but it would just be a reversion type move.
Yeah.
And you're bringing up financials because I believe it's one of the top weightings in small caps. I believe it's 1 or 2. That's important for them to do well. And it'll be interesting to see what the days and weeks to come bring, because when you look at a relationship like XLK, which is the ETF for technology, versus IWM, we are literally right at the highs from 2000, the year 2000. Pretty big horizontal level, right? Took 23 years to get there. Is this a place where you would potentially expect to see rotation? Same thing with RSP. You brought up equal weight S&P versus S&P itself. It is now back to the COVID lows. Equal weight had led going into the first part of this year until cap weight took over. Is this a place where you would see rotation? This would be logical. These would be logical places to see that. Or I know our old friend Pratty shared a chart of the Nasdaq 100 versus small caps IWM.
You talk about the Fibonacci thing?
Yeah, right near the 1.618 extension for QQQ versus small caps. So there's things here where, like, if you were to see rotation, this would be a logical place. This being within the next few weeks that you would see this rotation into small caps versus large caps. Time will tell. It's not a prediction. I mean, trends are trends. Large caps have been carrying us higher all year. I don't know why that needs to be any different. You mentioned semiconductors. What else are we seeing out of leadership? What are some other areas of interest for our listeners that might be worth paying attention to?
Well, I know you talked about momentum.
Yeah, I think that's a curiosity. When you look at what are factors, so if you look like a table of factors, so there are actual factors that are tracked as far as what impacts returns. Momentum is consistently in the top 3. It's why we believe in momentum. Relative strength is also high in that. And it is interesting to notice momentum since July percolating underneath the surface during the corrective period that was August, September, and October. During that time frame, stocks that were showing momentum held up the best. And that, to me, seemed a little spring-loaded. We'll see. Time will tell. Again, I'm sounding like a skeptic, but we'll see. If momentum has its day, I feel like momentum has been this beach ball pressed underneath the water. And until we see the majority of stocks moving higher, it will continue to be that way. It'll just be the large cap show. But if we see a release, if we see the pressing down of things like the Russell 1000, the Russell 2000, the New York Stock Exchange Composite, if that releases, we could have quite a move on our hands.
Something I hope for on a weekly basis.
Oh, yeah, it's a lot easier when markets are going up to be able to grow accounts. I mean, that's just a fact. If you've got an uptrend.
I don't want to be a goalie. Protecting's cool, but I don't need to be a goalie for 32 months.
Mm-hmm. I'll remind people too, if you're out there and you deal with investments, the last 2 years of the way the markets behaved has been tough, but from tough markets come easy markets. When that happens, enjoy it. And don't take for granted those uptrends. And, I remember a technician I have strong respect for who's since passed away, John Borman, back in 2017. There was an article where he basically just said, shut up and enjoy it.
Yeah.
And that's what I'll be telling people when we have an uptrend that's sustained and we're staying above 4180. There's not this pressure going on with the rest of stocks that if we have this broadening out and an uptrend in our hands and a lot of things, just shut up and enjoy it.
I'll be able to buy something more than ramen for my family to eat.
Yeah. You'll be able to enjoy mowing that lawn. You won't be thinking about that market. You got that fall lawn still going?
Oh yeah. Yeah.
We're in the phase here where you kind of start buttoning up the hatches. You know, you put the hoses away.
Yeah.
You turn off the pipe to the outside. You get the lawn mowed nice and low because you don't want those moles running through your lawn during the winter.
It is that time of the year where grass doesn't really grow. So you get the final mow in, now we're picking up leaves. Now we've got leaf season, which is a pain in the butt.
That's awesome. I mean, awesome from the sense of like, there is something satisfying. And admittedly, my wife is great at the leaf peak part, but getting the leaves.
You guys rake them?
Yeah. Raking.
Okay.
And then we have one of those vacuums for like the bushes.
Okay.
Where
like
you stop
back thing.
Yeah. It's basically a leaf blower that goes in reverse.
Oh.
So
okay.
it sucks up the leaves and it chops them up and puts them in a bag. I'll see if I can find it and send it to you. It's really nice for around the bushes, but there is something satisfying about a freshly mowed lawn in fall with the leaves gone.
Yes. But then they come back, and
then they come back. Yeah, that's true.
Our neighbors to the left they don't really pick up their leaves, so then I get their leaves. So it's I'm like a perfectionist who then has outside forces working against me. So it can be tough.
Yeah.
It's okay.
Yeah. With that little recess out of the way, we've talked pretty positive on here. Last week provided a lot of ammunition towards that might have just marked the end of a bear market.
Yes.
But what are some red flags to you? Like, we can't just be myopic and be like, everything's hunky-dory. I know we talked about 4180 in the 200-day moving average and 165 on small caps. Anything like that in your mind that you're also looking at that are like, red flags, this is a little bit of a problem.
I mean, outside the Russell, which is, been a red flag for months. I feel like in a relationship where every time you go out on a date with Russell, a new red flag pops up. And you're like, why are we even hanging out with this guy? We're not. We don't have no exposure to Russell, but a lot of people want to see the dollar breakdown, right? It's supposed to be a big tailwind. Thought we were going to get it, but still kind of around 105.
You're kind of saying it would be nice to see that move lower and confirm staying below 105.50 on DXY.
Yeah.
Whereas above that, it kind of has that false breakdown look and might actually be a warning sign the other way. That's a fair one. Anything else?
Probably credit spreads.
Yeah, credit spreads like triple C's.
They have moved higher. They had broken down and we've kind of back in there. Now, again, not that these are things where all these boxes have to be checked for Dave and I to say, yeah, we want to buy stocks. And you're probably never going to have every box checked.
And the credit spreads are just one of those things where it's kind of a measurement of liquidity. And if it's rising, you just have to be aware of that. And
what about you? Do you have red flags?
Yeah. I'll go back to your original one, really, when I think about it, was just financials.
Like, what are we doing? And like XLF looks okay. XLF back to actually bouncing off its 2007 highs. It's a huge horizontal level, like we'll call it 31 on XLF. But yeah, banks. And
even the big ones, like if you look at BKX, the Nasdaq Bank Index, you've got yourself a double bottom potential near 72, 73 with a bullish RSI divergence. Is this a spot where we see banks rebound? I'd like to see it. It's a prove me market for banks, in my opinion. On a relative basis, you also have a massive RSI divergence using BKX versus S&P, and you have this false breakdown look from last week. Now, this week, kind of giving some of that back. It kind of goes back to what you were saying about small caps. Like,
yeah, they fall into that category.
Like, just don't go lower and we'll be fine.
I don't know. I feel like I'm just watching like fifth grade boys basketball, which I've coached. I'm allowed to say this. I'm not making fun of fifth grade boys. I've spent many time, but you're like, dude, just stop turning the ball. Like,
right.
Didn't we practice this?
Yeah.
JC Perret makes a good point that small caps, by definition, are the smallest and the least important stocks, right? And we've learned that with the opposite end of the spectrum, the S&P and the Nasdaq this year. So again, it goes back to we Russell doesn't have to be up 50% for the S&P to carry on. I mean, it's clearly a risk sentiment.
Yeah, it's just a broadening out. The broader a base, the better the market health is. Like when I was talking about that Joseph's dreams of the fat cows versus the thin cows. Well, no one likes to see the rib cage of the animal that's supposed to feed you. Like same thing in a market. Like it's not like a thin market is always skating on thin ice. I don't know why I just married the visual of a cow wearing ice skates, but I did.
No, this is good. I actually had a reference to Genesis on my bingo card for today.
Did you?
Yeah, so I'm marking that one off.
Okay, excellent. If we have a broadening out in participation, when you think about since the lows in October for something like the S&P, that's not what's happened with a lot of other stocks. And to see those now participate during this potential 6-month window would be an appreciated characteristic to see. Now, we haven't even really talked bonds. I know in a previous episode, maybe 2 or 3 weeks ago, we talked about the TIP versus IEF relationship, which is a way of measuring inflation. And we had broken above an important horizontal level. And we've since pulled back since mid-October back into this horizontal level in the relationship. And this would be one way to gauge inflation. Maybe this is pulling back in. It's to be determined whether this is just a retest in the relationship, meaning testing this horizontal and then we move higher, or if it's a failed breakout and inflation is falling. A lot of that will be dictated by oil. What are we seeing out of oil?
Well, happiness. If you're someone who frequents the pump, the big horizontal level was, I'll say, 82-ish, 83. We were there for most of August and October. But now I'm back below 200 day. I'm going to say it's a flat 200 day, but $75 a barrel. So.
Well, and isn't some of this, not to get too fundamental, but a matter of rate of change? For example, like if interest rates don't necessarily have to scream lower, but as long as they could stabilize, or like gasoline prices or oil prices, they don't have to, while we're asking for trends in equities, if we could have trendlessness in input costs, such as the cost of money, like interest rates or energy, if you can have a sideways range in that is highly beneficial to other markets. It'd be nice. It'd be nice if
for the consumer.
Yep, for the consumer to just stabilize and for other companies. Anything else, Ian, that you'd like to cover before we wrap up this podcast?
I don't have anything.
Okay. You got birthday plans?
USC Vanderbilt game tomorrow.
Ooh, okay.
Yep.
Get to see your man
for our. I went to the USC UNC game in Charlotte to open the season. Left a bitter taste in my mouth, but we are, because I'm a glutton, absolute glutton for punishment. We're gonna make the trek down to Columbia tomorrow to watch some football.
You know what though? You get to probably enjoy. I should be careful. I don't think he's injured, but Spencer Rattler.
Yes, we'll see Spencer. It'll be good. It's an afternoon game, so that works out well for the family. Night games hard to do. Should be a good one.
Yeah, no, that's awesome. And then of course we have our Veterans Day recognition this weekend. And we want to say thank you to all those who serve this great country on our behalf, right? Putting your life in danger so that we can live in freedom. And we thank the families as well that also give those great sacrifices. So thank you very much to our veterans out there.
Watched a lot of Band of Brothers lately.
Yeah.
Very different watching it at 36 versus 12.
Yeah. No, there's
very different.
The sacrifices that our armed servicemen and women, it's truly tremendous. They never stop being disciplined. They never stop caring. They never stop sacrificing. And arguably, it's why we're the greatest country on the planet. And so we thank all our veterans for their sacrifice with your time, your family, and for those that have gone before you. So thank you, guys.
Have a great weekend, everyone.